Good morning, everyone. I'm Vince Lancy. It's 7:40 in the AM Monday morning. I hope you had a good weekend. We have a lot of topics to go over, so let's get to them in short order. First up, and this is potentially earth-shattering for the stability of markets, the Department of Justice is investigating Fed Chair Powell. We'll go into that. Goldman's Silver Secret, that's a piece that we wrote over the weekend, breaking down a Goldman Sachs report. Gold's January effect, that's an opinion by Deutsche Bank that we break down. There are three other news stories: uranium squeeze, Rio Tinto eyes Glencore, and Thailand's gold restrictions. And then, of course, there's the market reaction function to these news items, which has been nothing short of extremely bullish. There's the homepage. Let's look at the markets. 10-year yields are up 3. The dollar is down 37. The S&P 500 is down 38. The NASDAQ is down 155. Gold is up 75 at 45.85. Another new all-time high. That's 96 since 2024, but who's counting? Silver 84.07, up $4.17, above the previous all-time high, which puts us on a path to $92. We'll get into the potential for that later on. Copper up 2.6%. That's 15 cents. WTI up 2 cents. Natural gas up 5 cents. Bitcoin down 300. Ethereum down 7. Palladium up 42. And platinum up a mere $78 at 23.47. Gold, silver down almost 2. And grains are all up, with the geopolitical grain wheat up the most, up 1.4%. The first and most important story: the Department of Justice is opening a criminal probe into Fed Chair Powell. Federal Reserve Chair Jerome Powell has been subpoenaed as the Justice Department opens a criminal probe into the Fed's headquarters renovation and related congressional testimony. Powell says the case is politically motivated and tied to monetary policy pressure. Markets reacted swiftly, with the dollar weakening, gold hitting records, and equities slipping. Very briefly, whether it has merit or not doesn't matter. It was done. And that shows to the rest of the world that the rule of law is bendable. By who, we don't know, but it's bendable. Over the weekend, we put out an analysis. We consider it must read if you're a silver person. We view the development as important. Goldman Sachs put out a report that closely mirrors what the bank wrote about gold in 2024. At that time, we had highlighted that gold's beta was changing and traditional correlations were temporarily suspended. Goldman stated then that the beta of gold is resetting higher. Quote, that language validated what we had already seen observing in 2023 and 24. The same framework is now being applied to silver. The old neo-Keynesian correlation structure is resetting at higher levels. Business as usual is no longer operating under those old assumptions. Structural change is now expressing itself in silver, just as it previously did in gold. We maintain our standard caveats and list them at the bottom of our analysis. The beta reset pattern is spreading, and monetary metals will never be viewed the same way again. Next up, the bullion banks are now talking about seasonality. Does gold have a January effect? January has historically been one of the strongest months of the year for gold. Over the past 10 years, approximately 70% of Januaries have closed in positive territory. This pattern remains consistent when measured across longer horizons of 15, 20, and 25 years, according to Deutsche Bank. Median returns in January over the past 25 years have been close to plus 3%, positioning January as the most reliably bullish month for gold on a seasonal basis. Those of you who have been reading GoldFix since 2022 know that we covered this very, very, very early on, actually in an interview with Daniela Cambone. We went into the seasonality and why buy season starts in November and ends in February, and why sell season starts in August or September and ends in November. Uh, since then, we've gone into that many times and explained it. We tell you here, in addition to what they say, why there is risk to this analysis. And while January and February are where the big money is made, but it's not the easiest money to make. So we would suggest you read that if you're thinking about buying silver or gold right now. Three pure news items. Uranium squeeze is set to intensify in 26 out of Toronto. The global uranium market entered 26 with a widening structural supply deficit as production constraints, geopolitical shifts, and rising nuclear power demand tightened availability, reshaping fuel procurement strategies across utilities and reinforcing the strategic value of advanced uranium assets. We would say this as well. Uranium purchasing for nuclear power is at the margin very impulsive. It's such a small percent of the actual uh, expense going into developing nuclear power that they're going to buy a little bit more. They don't care what the price is. So keep that in mind. Rio Tinto may buy Glencore to form the world's biggest miner. Out of London, Rio Tinto confirmed that it is in early stage discussions to acquire Glencore in a potential all-share transaction that would create the world's largest mining company, underscoring intensifying consolidation pressures driven by rising demand for copper and other energy transition metals. We remind you that Glencore is the firm created by Mark Rich that avoided the oil embargo that got Mark Rich banned from the US, eventually that got him permitted back in by Bill Clinton, and now they're going to be potentially partnering with Rio Tinto. Look at Glencore as, there are a lot of things, but look at Glencore as the supply chain. They get it from point A to point B. They have the relationships, they have the warehouses, and look at Rio Tinto as the creator of the metal. Very important development and would be a signal for other companies to consolidate. Third story, Thailand begins gold restrictions. Now, Thailand is preparing new restrictions on gold trading and financial data reporting as authorities seek to contain currency distortions, speculative capital flows, and money laundering risks linked to a surge in gold transactions during a second rally in the precious metal, a record rally. Okay, that's pretense. That's bullshit. China has been pulling gold and silver from all the satellite BRICS countries for the last year and a half now. You could see that in the kilogram bars that are just completely disappearing off the market. You could see that in Eastern refineries being blocked up and only being able to make a certain size bar. You can see that in the locals in countries like Thailand are now hoarding gold because they see it disappearing. And you can see what Thailand is doing is Thailand is making sure that the Thai baht doesn't get, quote, too weak compared to gold. But the truth of the matter is the gold is earmarked for China, and they want to make sure that they're taking out the marginal competitors to it. Why is that important? Because it's capital controls, because it's the beginning of restriction of ownership of gold unless it's sanctioned by the government itself. There'll be more of that. More news analysis over the weekend. Founders, we just sent this out, geopolitics, rest in peace, Pax Americana. That's a breakdown of the NSS and our assessment of what it implies. And it implies we're not building nations anymore. We're tearing them down. Or put it this way, we're acquiring the resources from within them. Ideologically speaking, we don't give a shit anymore. And that's all part of the Don Rowe doctrine. Hartnett, long boom economy, short bubble stocks. Interestingly, Hartnett has a lot of sell signals on his contrarian indicators, but he's telling his clients to stay long stocks, but to move into cyclicals. Interesting because yesterday we had a conversation with Michael Oliver in the founders discussion, which I'll be making available later on today once I do some editing on it. And in that conversation, Michael and I were discussing one of the concepts of the fact that, well, let me just paraphrase what he said. Stocks aren't necessarily going to roll over tomorrow. Okay, they could actually go up a little bit. They need to breathe a little bit higher before they set up for a sell-off. And keeping that in mind, that is a different way of saying what Michael Hartnett is saying, which is don't be short yet, but if you're going to be long safer stocks. So we discussed the leadership and many other things. We'll talk a little bit more about that in a second. Data on deck this week, CPI and PPI Monday. Today's speakers, CPI on Tuesday, PPI on Wednesday, speakers on Thursday, and Friday speakers. I'm not sure if it's related to the PAL defense mechanism or not. Please buy new mugs and sweatshirts in addition to our hats and support independent media, MAGA, MALGA. And we have the new, I don't know how to call it yet, but the gold, the Santiago gold mug. All the proceeds from that will go to charity, however many, 3 that we sell. On Sunday, Michael Oliver visited us, spent about an hour and a half. And what we did was he took questions from everyone. And the format was we went through his weekend report, which is energy, which is stocks, bonds, and commodities. And there was a big feature on metals in there as well. And he went through his premise, and we discussed many things in those areas. So it's kind of like a walkthrough of his report, which I think was very beneficial for people who already subscribe to him. You know, he gets you a feel for how to walk through it, and for those that are considering subscribing to him. Anyway, that was tremendous time. I really appreciated that. Thank you for dropping by. And well, you know, we recommend his work, and well, we're reciprocal in that regard. But there you have it. Again, it was about an hour and a half. I'll be releasing that to founders later on today, and then unlocking it for the general public later on in the week. Lots of good insight, some good insights in there that he hasn't mentioned before yet. We actually discussed some particular miners. We discussed silver, SIL versus SILJ, for example. SIL juniors, I think Michael said that 35% of SILJ was in SIL. So there's really nothing junior about it. And also that reminds me of something that Jordan Roy Byrne had said. Anyway, so that's it. Let's look at the markets. All right, I want to start with an actionable idea. Your action, not mine. I'm not telling you what to do. Common sense disclaimers. I said if we get above this all-time high, the wick, that we had a measured move. You know what? We do. I mean, it doesn't get any more perfect to have this conversation. Whether it happens or is profitable or not, we don't know. But this is the perfect moment to have this conversation. So here's how it works. When a market is in a trend and makes a new all-time high or low, and you have a rejection off the high, especially when I know who's selling it, and the market has a violent retracement, stabilizes, then works its way up in a semi-orderly fashion. Well, this is a cap, trade, and accumulate. When it gets above here, a lot of people are looking for, well, what's my next target? Now, your next target could be $144. Your next target could be $300. It could be $500. I don't care. Not everybody can stay that long-term focused all the time. Some people, need signposts along the way. And so this is another signpost. These have served us very well. Okay, pickups. Above this high, you have depth equals distance. So you have 83.70. You go wick to wick on these, down to 70.30. So that's $13. That puts us at $96. Now, let me just back it off a little bit just to hedge my own enthusiasm. 83, we'll put a fine point on it for everyone that needs to be pinpoint on this. Above 83.75, 71.50, so let's call it 71.75, $12. $92.75. That's a target. Your targets on the upside, they can be based on Fibonacci, they can be based on Gann lines, they can be based on all kinds of things. They can be based on measured moves, 132%, 166%, what have you, right? But there are 3 ways to look at markets when we're at this stage. One is it just doesn't matter. We're going up, right? That's the I've been long and bullish forever mindset. They don't need to have this conversation. They're not watching this show, right? Then there's the people like Michael Oliver that say, look, I'm very convinced that it's going to anywhere from $150 to $300. And he has his indicators that say that. And those are things, and I have a similar mindset stemming from my understanding of critical minerals and what happens to them. And then there's people who want to think like us, but who have to get up and look at shit for a living and are trying to not react to it. And I'm saying to you that if you have nothing on, if you're not bullish or bearish, this is a measured move trade. The measured move trade is you get long, not you, me. I got long right here, right now. The problem with these trades is when do you get out if you're wrong? And the answer is it depends. Not technically. Fundamentally, one way to do this is you buy it right here, 84.04. Bang. We've all bought it right here. And you stop yourself out on a tight stop if the market goes below 83.75 intraday. That's an aggressive stop loss. And that stop loss is something that you'll get out and get back in. You'll chop yourself up as we get in. That's the Paul Tudor Jones way. I'm in, I'm out, I'm in, I'm out, I'm in and out, I'm in. And then when it starts to work, he just triples down and it goes his way. That's the first way. Not everybody can watch a screen all day, right? I don't even do it anymore that way. Second way, as you say, if it settles below 83.75, I'm out. But what if it's early in the day and the market's below 83.75? Well, you say if it settles below 83.75, I'm out. Or if it trades and you find another price, the price might be 82.75. The price might be how much money you're comfortable losing on any one trade. But that's the way to do it. Okay, so for me, I have been for the last week putting on, I mentioned this in the chat, I've been putting on short AIQ and long SILJ and SIL. So I've been putting this trade on preemptively because I'm bearish stocks and I wanted to do it with miners. You guys know that I wanted to do miners. Anyway, so the trade right now, which I will do if we're in this area here, is to buy it with a stop out. And if it's going to work, it'll work rather efficiently. It won't be like 6 months of sideways movement because the sideways is bad for this. Even though sideways is bullish for silver in general, sideways is bad for this. You don't want it to think and hesitate. Maybe we go ahead and pull back once, then go up. Who knows? But you don't want it to go sideways. This should happen in short order. That's how measured moves work, at least in my experience. And of course, you can look at other things like trend lines and what have you. But that's the trade that I'm going to do. I recommend you do nothing except see a therapist if you're thinking about doing something that I just said. And I'm not joking. Gold. Oh, by the way, these kind of get, people talk about cup and handle, like this is a little bit of a daily cup and handle. There's your cup and there's your handle, and there's your breakout. You know what? That is what that is. It's also a measured move, broken, and a measured move, broken. So the measured move, it's very fractal, this market right now. You could say above 82.30, we've got $9 in this on the upside, as long as we stay above 82.30. And we've got potentially up to $13 if we stay above 83.80. I don't want to blow smoke up your ass. Just be aware that news items will change this. I'll give you a date to think about. January 16th, the U.S. government's going to announce likely whether they are tariffing or not tariffing silver. Let's assume that they're not tariffing silver. But doesn't mean we'll stop buying it. But let's assume we're not tariffing silver, and you will shake out speculative longs doing that. I'm Vince. Buy a hat, subscribe, all those good things. Have a great day.